Hi, we're at the Metals Investor Forum, and I'm here with Jay. Thanks for coming to participate again in the conference.
It's always a pleasure. It's one of the best conferences I've ever attended, honestly.
Is it? It's such a great group of companies. It's always a really interesting few days. So right now, you have a radio show.
Yes.
And one of the best thing to me about your radio show, other than you, is you get this list of just really interesting guests. And for someone like me who assesses the gold space, I love that because you talk to the gold space from a technical perspective, from a sort of macro perspective, from a fundamentals perspective. So I just kind of wanted to pick your brain on what you're getting from those areas, from all these, knowledgeable guests with whom you speak every week. So where do you want to start? You want to start on the technical front?
Well, we could. Michael Oliver puts out a very good publication called Structural Momentum Analysis. And I found him to be really very, very, very helpful to me, not in terms of short-term investing, but my interest as a longer-term investor is, are we in a bull market or are we in a bear market? Are we in a secular bull market or a secular bear market? And because I can ride out the storms in between, the volatility is okay, but do I really want to be in gold now or not? And or whatever the market is, and he covers many different markets. But he's been remarkably good on gold and keeping me in when I might have been tempted to jump out at the wrong time.
Okay.
So Michael is quite constructive on gold right now. Even though we've seen a little weakness lately. He put something out on 2 days ago, basically, and he was saying that he's showing his structure. Now, the momentum work that he does usually gives you a signal in or out more quickly than people who just look at the price charts.
Yes.
And that's what I've found very, very beneficial.
Yeah, that's what momentum is supposed to do for you. Yeah.
Right. He's very helpful that way. And he looks at the dollar. So one of the other things that I like about him is he looks at other markets that impact the gold market. Okay. So the dollar is one he's looking at, and he's very, very constructive on the euro right now, believes that we're going to see a weaker dollar. Okay. Timing, as I say, he's not the greatest timer, but the momentum and the structure are suggesting that the dollar has basically had most of its run. Okay. The T-bond and other things that are very major markets that are very important in terms of the economic picture, he's also very good with.
Okay.
So I'm quite confident at this stage. I want to be long in gold shares.
Okay.
I hope that I have the courage to get out when it's time to get out, because I haven't always done that.
Right.
And I'm trusting Michael to help me because he's been at it for many years, has had large institutional clients until just recently.
Right. Okay.
So he's very experienced in many, many years. It's his own work. He's designed it himself. It's not something that he's copying from other people. So it's his own proprietary work that he's done very well with.
I love having a technical person that you can check in with, because I certainly, and I think you as well, you get a little bit more into the macro stuff and into the fundamental stuff. So it's nice. Yeah. Whether they're confirming your hypothesis or whether they're countering it, it's always nice to have that check-in. Okay, so then on the macro front, you talked about that a fair bit in your talk today. What do you think's going on? And for me, I keep seeing this big divergence between hard and soft data, and I think that's very confusing.
Yes.
I don't know which way it's going to resolve.
Yeah, well, I think you can't divorce geopolitics from the discussion. And we are in an empire that is hungry, it's in debt, it needs to expand forever. And there are countries around the world that don't want to cooperate with our aggressive desires, I think. That's the way I see it. We started in 1971 when we went off the gold standard. We paved the way for a petrodollar standard, essentially, in which the dollar received bids or a demand for the dollar in part because oil had to be priced in dollars. Kissinger arranged that with Saudi Arabia and the other OPEC countries. And I think we also enforce that with our military power as well. Countries that have decided they want to use the euro instead of the dollar or some other currency other than the dollar have found themselves with some of the military wrath of the United States, so Saddam Hussein and others. Right now, Russia and China are very much interested in preserving their sovereignty, and they're very much interested in another currency called gold, I believe. They are stockpiling huge amounts of gold. They're Russia and China, And China is the largest gold producer now, keeps it all in China.
Yeah.
So I think what they're doing is getting ready to compete with the dollar. And I think that is something that is not going to go over very well with the United States. So we have this huge military buildup, and Mr. Trump is suggesting that he's going to make America great again and make us even stronger than we already are militarily, although there's nobody in the face of the earth that can compete with us militarily, which is why I think the Chinese and the Russians are deciding to defend themselves in another way, commercially, with a currency and other infrastructure that they put up to compete with the Western infrastructure. So there's that going on. Meantime, though, this massive amount of debt and printing press money that has to pay for it because there's not enough savings, taxes can't be raised. So I think we're in an environment where we're going to see an ever-increasing amount of money pumped into the system to suppress the interest rates because there's too much debt. If the interest rates were to go to anywhere near where they've been historically, it would blow the whole system up. So that's why I think you have to own gold, because gold is real money. It's money that has value independent of other people's ability to repay. Our fiat currencies are valuable only to the extent that people are conned into believing they have value and people are willing and able to pay their debts. The day that doesn't happen, then the system breaks down, as we saw in 2008, 2009. So I think in order to try to preserve it as long as possible, the policymakers, the central bankers, have no choice but to continue to suppress interest rates.
Right.
And negative interest rates, or at least declining real interest rates, are very positive for gold. So that's the fundamental reason that I think that jives with Michael's technical picture. I think the ducks are lined up. But that said, I really hope I can keep an open mind. I'm a perma bull on gold, but I know that we see these long bull markets in which the indices go up fivefold or so, and then you lose 80% in a very short period of time. It's very painful, isn't it, Gwen?
It absolutely is, for sure. I know, and I appreciate what you say about hoping to keep an open mind, because
it's very important.
We're naturally, by what we do for work, we're naturally biased, and so you want to make sure that you're finding people who have counter opinions and
it's very important.
And considering them, for sure. And I know certainly in the short term right now, big picture wise, I agree with you completely. In the short term, I think we might have a fairly weak summer. I don't know if there's going to be that much excitement around gold in the next even 6 months. So it's an interesting time frame. It's a bit of a treading water for the sector, despite crazy geopolitics and very strong fundamentals.
Right, I agree with that. And I think that this is why I like to see the longer term perspective and be sure about whether I'm bullish or bearish longer term, because when you have these dips, it's a good opportunity to add to your position. Buy on the dips. That works when you're in a bull market, but it doesn't work if you're in a bear market, as I've also found out in the past.
The dips that just keep dipping, right?
That's the problem.
Exactly. Hopefully we're in the upwards. We think we're in the opposite situation now.
I think we are, but if we're not, I want to know the truth, so I keep looking.
Right. Well, thanks for all the work you do on the shows. It's great to hear all the experts and get all that opinion to incorporate.
Yeah, it's good to hear yours as well, Gwen.